Hello and welcome to Under the Banyan Tree, where we put Asian markets and economics in context. I'm Herald van der Linde, Head of Asian Equity Strategy here at HSBC's Global Investment Research.
And I'm Fred Newman, Chief Asia Economist, and Japan is holding elections at the end of this week. We're going to talk about what that could mean for Asia's second largest economy, which is often seen as a barometer of how things could play out elsewhere in the world.
Why are these elections happening now and what's at stake? Let's get the conversation started, dig into these questions under the banyan tree. A little bit of background for you before we begin. Japan heads to the polls in a general election on February the 8th. So far, the ruling Liberal Democratic Party, the LDP, led by Prime Minister Sanae Takaichi, is favourite to win. So, Fred, we had elections in Japan not too long ago. So why are we having elections again? Can you remind me of that?
That's right. We had actually elections last year, and the Japanese are heading back to the polls now this Sunday. And that's because we have a new prime minister. The party that is leading the government has essentially changed its leader. And now we have Sanae Takaichi-san, who is the new prime minister. And it's her right to call a new election, a snap election. And that's sometimes done in Japan, just to go to the electorate and get a new mandate. She's doing it very early on in her tenureship. It's in part also because she doesn't have a large majority in parliament. In fact, it's in the minority. It's just ruling in a coalition government. And so, there is a lot of eyes on this election to see how big a mandate the new prime minister will receive.
So she's trying to get some freedom to implement reforms and policies that she stands for. So on the economic side, what are these policies that she really would like to implement if she gets a larger majority or has some more political freedom to put these in place?
Well, she's seen a little bit as an inheritor of the policies that Prime Minister Abe had
about a decade ago.
Famously, he was her mentor, and she's very much in that same line.
Just as a reminder, he had the three arrows, right? Monetary stimulus, fiscal stimulus and structural
reforms. And that was really quite aggressive fiscal monetary policy to get the juices flowing again in the economy.
Because growth has been very weak, and so they really want to invigorate the economy.
And so, at some point, Abe left office. Sadly, he got assassinated. He's no longer with us. But she kind of inherited that kind of broad thought, political thought, if you will. And so her view probably is to institute a more aggressive fiscal policy, monetary policy, and get Japan working again. And so that's in part what this election is about. Now, economically, though, there are a bit more constraints on her to implement these policies compared to Prime Minister Abe. And that's because at the moment Japan has higher inflation, partly as a successful result of the Abe
the reinvigoration
policy
of the economy led to high inflation.
Yeah, so you cannot be too aggressive on monetary policy because you already have inflation. The other thing is on fiscal policy. We saw very large budget deficits under Abe, but at the moment, the bond market in Japan a little bit jittery. So there's the question how big a fiscal stimulus can come without really upsetting, the bond markets, because otherwise yields will go up, the interest rate will go up.
We've seen this already, right? Japanese bond yields have gone up. I mean, 10 and 30-year bond yields are significantly higher. They're still not very high on international standards, but significantly higher than they were, say, 12 months ago.
So that there were some wobbles a couple of weeks ago in the Japanese bond markets, partly because during the election campaign in the run-up to Sunday's election, there are some proposals to cut to cut tax rates and to add more fiscal stimulus. And the bond market, didn't have a good day for many reasons because of a lot of uncertainty. But, the bond market you can see is kind of looking at, well, how aggressive are these policies? And if they become too aggressive, then the bond market's going to say that means too much debt will be issued, and so interest rates will have to rise. And so that we already had a little bit of a preview of that.
But in certain cases, this is important, right? Because Japan is seen as a sort of test case, if you want to use that word, of fiscal prudency and limits to fiscal spending, because that's a question that has been raised in the U.S. bond market as well. maybe in Europe, because there's a lot of fiscal stimulus going on there as well. So what happens in Japan is therefore actually something the whole world is looking at in a sense, right?
That's right. So what you have in many developed markets, US, UK, some of European markets, Japan, is very high public debt. And so if there is any signs of the public debt markets starting to wobble, starting with interest rates start to rise, if that were to happen in Japan, it might send a signal that perhaps in other markets, investors also might get nervous. And so that's why this election is important, because we have to see how the bond market in Japan will digest the result. How far can politicians, any politicians, by the way, it doesn't matter who wins, how far they can move the fiscal needle really without upsetting the bond market. And
because in a sense, what happens then, you as a government, you want to spend more money. You say, we're going to borrow some more money. But if the cost of borrowing is much higher, then actually the benefits you get from actually spending that money is not as high, right?
Well, it means you have higher interest rates. It means the government needs to spend more on servicing the debt. But it also means that interest rates in the economy go up because the government is borrowing so much, and therefore it's more costly for private companies to borrow. And so that's then also not good for growth. So having government bond yields rise too much is a drain or a drag on the economy overall. And that's why this election is so important. That's why it's not just important for Japan, but it's really important for most developed markets that have relatively high debt levels.
And where do they want to spend that money on? Is there anything in particular they'd like to look at, or is it just tax cuts or these sort of things? Because I think there's some food taxes and these sort of things were discussed.
Yeah, so it's interesting. It's changing, right? So in the past, we know that in Japan, a lot of fiscal stimulus was always on infrastructure. You know, the fantastic trains across the country.
Bridges, roads everywhere.
That has changed, actually. So increasingly, the government is focusing more on cost of living issues. And that's, again, reminiscent of the discussion in the U.S. and U.K. and Europe, is that the average person on the street is suffering from higher inflation, higher food costs, right? Cost of living costs are going up. And so the government has redirected some of this fiscal spending towards easing the tax burden on purchasing food, for example, or other household items, or supporting childcare, for example, healthcare costs, et cetera, and energy in particular in Japan. So you're seeing the government shifting its spending. Now, that's a fair response to cost of living pressures in other countries as well. But how far governments can go, that's really being tested right now in Japan and in the government bond markets, because there's a specific proposal to reduce the tax on food purchases actually to zero for 2 years. And that would cost about up to 0.9% of GDP, and that's already starting to sound quite expensive. And so the question for the election is, will this actually be implemented? How large will her majority be? Or will there be another government? What exactly happens on fiscal policy? And I think that's why it's of wider significance than just with Japan.
Very insightful, Fred. I think we're taking a very quick break here and then maybe look at what happens with interest rates in Japan and the currency and what the implications are for the equity market. Fred, you talked about how they want to do more spending, fiscal spending, but this may be a little bit more constrained than what they had, say, 10 years ago. Is that the case as well if you think about monetary policy, so interest rates set by the central bank?
That's right. So fiscal policy is a bit more constrained to what we're used to in Japan. Yeah. And on the monetary policy side as well, because we have now inflation in Japan. And then, core inflation is running around 2%. Headline inflation is above 2%. So you have essentially, now that inflation is back, you don't have that much room to keep interest rates low. You need to actually raise interest rates. And so that will be interesting to observe over the course of this year, how much the Bank of Japan can actually withhold interest rates hikes despite the inflation. And why this matters is because that directly links with the currency. You've seen the Japanese yen being very, very weak as inflation increased in Japan, but interest rates did not as much. Now the pressure's on for the Bank of Japan to raise interest rates in line with the increase in inflation. And if they don't do so, then there's a risk that the currency will remain weak. And of course, a weaker currency in itself can be a double-edged sword for an economy like Japan's, because it means households pay higher spending costs. It means that energy import
and anything
costs
you buy
will go
outside
up.
the country is more expensive, right?
Everything you import
inflation.
will be more expensive, and so the Japanese electorate has become quite sensitive to the movements of the yen. So even when the yen falls in value, you see household confidence declining. And so, there is also a need to stabilize the currency. And so that means there's really not much room to run very accommodative monetary policy. Monetary policy is much more constrained than it was 10 years ago.
So there's not that much room on the fiscal side. There's not that much room. There is room, but not that much room on the monetary side. So then you have structural reforms, right? And that's been
That's right. And that's maybe sort of the bullish story here, if you will. You could say, well, fiscal policy, we've kind of exhausted that avenue. Monetary policy a little bit, or at least there's some more constraints in the past. And what do you do then if you're a politician? You want to get growth back up. You want to, get confidence back up. Well, you have to then look at structural reforms. And Japan has done quite a bit in recent years, but there's a lot more you can do. There's liberalization of the services sector. There's liberalization of employment law. There is certainly increases in productivity that could come through. But also, and Herald, and this is where I want to ask you, it's corporate governance reform, because that matters directly for the equity market, right? And you saw enormous rallies in equities in recent years, partly, I think, because there's this reform on corporate governance that they've done.
Yeah, what we've seen, so about 10, 12 years ago, they started to talk about corporate reform, and the market was probably initially quite skeptical, and things were very slow. They raised dividend payments, which is good for investors. They did more share buybacks, but it was quite minimal. But I would say after 2016 or 17 or so, it started to accelerate for a variety of reasons. The stock exchange made it a bigger issue. They issued some what is called a stewardship, a sort of a code of conduct. A new index was put in the market whereby only high profitable companies were included, these sort of things. Pension funds said, we're gonna pay more attention to this. And this is good. So we've seen a continuation of higher dividends and share buybacks. What we also need to see is that the Japanese corporate structures are very much still, I would say, something that emerged after the Second World War. You have these larger conglomerates that are working together. So you have a bank and a steel company and maybe a consumer company and an insurance company. They all work together in a group. They have cross holdings and they need to dismantle that. That would really mean that investments that you make in other companies, you can now then say, we're going to pay that back to your shareholders and they can do something else with it. We have seen some of that, and this is a slow process. It's got all sorts of implications. You need to go through legal reassessments of these holdings sometimes. So that will take time, but further pressure on corporate reform could be very positive. I don't think it's a necessary driver of the market, but it's a sort of additional source, a cherry on the top, if you want to put it like that.
And we talked about Japan, in some ways, the challenges that Japan is facing is also important for the rest of the world, right? The fiscal challenges that Japan is facing, even the constraints of monetary policy is something that we could see
But
elsewhere.
also actually the reform.
Corporate governance reform, yeah. I mean, Korea
because we see this
is,
absolutely. So Korea is very explicit about it. They have the Value Up program. They is very similar. They also want to raise dividend payments and share buybacks. Maybe restructuring groups there is a sort of different dynamic in Korea. You also see it actually in China, but also, for example, in Singapore. More dividends, more share buybacks. So it's something that is changing across Asia. And Japan was arguably the first one to really explicitly talk about these sort of corporate structure reforms. And that's exciting.
So all eyes on Sunday's elections. I know, Herald, you're going to, take out your popcorn. You're going to sit in front of the TV and you're going to be tallying up those votes, I imagine, on Sunday night.
Absolutely. Well, actually, I'm not going to take out the popcorn, but I'm going to take out some sushi maybe.
Oh, yeah, election sushi. That's
sushi.
a good way to end the week, Harold. And on that note, it's thank you and goodbye from all of us here in Hong Kong.
Thank you for joining us, and remember to like and subscribe to Under the Banyan Tree and our sister podcast, The Macro Brief, if you, of course, haven't done so already. Have a great rest of the week, and we'll talk to you again very soon.